Good morning, and thanks so much for tuning in the trade setup. I'm Neeraj Shah, and it promises to be a good start to the trading day, by the way, because the global cues are slightly positive. So the U.S. markets, the way they ended was okay. I mean, in the green, and therefore the support on the global side seems to be positive. I would reckon that if you look at Asia and the SGX Nifty, you would see a tinge of green. In fact, the SGX Nifty, if I'm not wrong, early morning when I saw was up about a 50 odd points. So there's a bit of green, if you will. And 50 points, frankly, on that base is hardly anything. But you will see a tinge of green, as I said, on the SGX Nifty that will come up in a moment for you right here. In fact, more than that, 0.5%, so about 18 and odd points. So the start promises to be okay. But I must tell you that I think now this is the fifth or the sixth voice that we're seeing on the global side, which has downgraded India. And as much as we are India optimists and we believe that there's a long-term story, and Mr. Junjunwala and Sunil Singhania and Shankar Sharma, all of them say, and these are wise men who are saying that the markets will continue to do well. I think I heard, for example, Sunil, and you will hear him on Alpha Moguls this Thursday, speak about how there's a probability, a very high probability that we might flatline at the point to point from now to the next somewhat at the current levels on the Nifty, and that shouldn't surprise anybody simply because of the kind of valuations that we are trading at. Nilkan Mishra, for example, in a show with Ira, said that even if we trade at the current valuations 1 year out, which is November 2022, and we assume that the earnings growth is as strong as people anticipate, will still be one standard deviation above normal valuations. Now, I believe that has what led to even CLSA coming out and saying that they are going underweight India. They say, this report says, by Alexander says that we call time on the 20-month rally in Indian equities, lowering our exposure to India within the Asia Pacific ex-Japan portfolio to 40% underweight. Our concerns range from elevated energy and broader input price pressures, applying downward pressure to margins, all of which is seen in quarter two, by the way, the current account balance, and thus the currency outlook, the withdrawal of the RBI stimulus, and the lack of upside implied by Indian equities, which are the typical macro drivers. I mean, uh, I think you got to pay heed to it. I mean, they've of course gone out and said, viewers, that the rich valuations and earnings disappointment probability and a lack of marginal buyers add to the motivation to book profits in India. Now you got to think of it. If there are 5 or 6 large houses, all of which are saying that, hey, this is very expensive a market, don't invest here. You can invest in other markets. I'm sure their clients will pay heed to that. So as much as I would love to believe that we are a great we great isotopes with superb earning prowess. I think quarter two has shown us that with the best of companies in a broken or a fragmented supply chain situation in the world, earnings disappointments can be very, very sharp, and no reason to believe the same can't happen in India going ahead for the larger companies as well, for a larger set of companies. So I'm not trying to paint a doomsday scenario. I'm no one to do that, frankly. But there are 5 or 6 large houses which have said that they are moving underweight on India. Remember, one last word on this. I don't want to spend too much time here, but one last word on this. Chris Wood said that if any taper-led correction comes into India, it could be a buying opportunity. So if there's a corrective move comes, yes, it's a buying opportunity. Fresh money at these levels, a lot of people are saying, be careful. Nevertheless, let's move on to the trade setup for the day. I think the benign global markets are great, but flows are out of sync with any optimism. Leave out what happened on Friday. You largely seen flows not in favor of India, Indian markets and the global side. And I think it'll be interesting to see what happens for the next 2 or 3 weeks as well as we approach December. The bank nifty sentiment is not very bullish, but so much of talk around the higher CPI levels and whether those will have any bearing on the sentiment, unlikely to do that. Nifty FMCG and Nifty I.T are likely forming bases as per some technical analysts. It'll be interesting to see if these indices, having corrected so much, give that bit of a support. Remember, in a market scenario which is not looking extremely bullish, typically these defensives tend to come to the fore. Interesting to see if this time around happens the same or no. I do think, though, based on the commentary that I've seen from all the FMCG names, that not necessarily that Q3 will be very strong either. So you've got to be mindful of that. What about stocks to watch? It's a very long list. I obviously haven't covered all. There are a bunch of other stocks that I would have missed, but I'm trying to cover all the ones that I can and the ones where I see that there could be some bit of reactions thereof. But obviously, I've missed some. Please keep that in mind. ONGC, the PBT was weak due to losses at MRPL and weak OVL performance. Not to forget that HPCL performance wasn't the strongest either. The reported PAT, though, was up sharply due to large tax reversals. The problem for ONGC is that the production decline trends continued in quarter two. So in quarter one, the production numbers were not that great. Quarter two, the production numbers are not that great. Remember, there are the skeptics, and I think Nomura is a skeptic, and some of the others have said that the oil fields of ONGC are so old that for us to expect a ramp up of production in a fast manner is difficult. In fact, what we've seen is production declines for 2 straight quarters at least, if not more. The only caveat, viewers out here, is that ONGC quarter three and quarter four numbers will be aided not just by higher average crude realizations, but because of the gas price hike that has happened, higher gas realizations as well. And both for ONGC and the others, I think there is merit out here. So just keep that in mind. But the numbers, both for ONGC and Oil India, didn't quite look as strong. Hero MotoCorp was the other nifty name I thought that was interesting. The Kotak note sums up what seemed to be the more pervasive argument, and most brokerages probably have this view. Maybe a couple of others might have different view, but they've reduced the target price to 2,800. But leave that out. They are saying that the company will maintain the profitability going into FY23, but they expect only a gradual recovery in domestic two-wheeler volumes, given a steep increase in cost of ownership. And they believe that the company's weaker presence in the fast-growing segments like scooter and premium motorcycle and exports remain a concern. Well, it's not an expensive stock, sorry, but it stayed cheap now for a while. And it's not quite seeing buyers. Contrast that with what TVS has done in the last 6 months or 3 months, despite all the concerns around valuation. It tells you maybe where the flow of the money is. We can't do it right now. That'll be putting too much stress on Virat. But maybe tomorrow we'll try and show you a comparative of the price performance of TVS Motors and Hero MotoCorp, maybe even a valuation performance. Just tells you a story of whether or not we like it or not. There is money that has moved into the expensive two-wheeler names which have got EV presence, etc., etc. Somehow it was lacked. Nalco is the other one, which came on with what I thought was a robust set of numbers. Really, just look at these numbers, viewers. Revenues up 51% YOY, 45% QOQ. EBITDA up 308% YOY, 94% QOQ. PAT up 7x YOY, 115% QOQ. You may believe, or you may want to say, argue that YOY is not a great way to look at these numbers simply because, some of the businesses were shut, which I don't think, by the way, frankly. But in Nalco's case, yes. But compare it QOQ, it's still a very robust set of numbers. The implied alumina realizations were up 19%, 17% QOQ. Aluminum realizations are likely at a premium of about $158 as per systematics calculations over average LME prices. That tells you a story or two about how much Nalco is able to charge, and probably for both Hindalco and Nalco pretty strong. But Hindalco largely, get into the converter thing. Nalco pure play aluminum, pretty strong show. And alumina prices, they say, a couple of brokerages say that have rallied to about $450 per ton since the end of quarter two. So actually they moved up further. They went up, I think, to about $500, but they've rallied even more from the end of quarter two. So maybe quarter three promises to be decent too. I thought one standout result of the day today, frankly, or the weekend was Nalco. The other one, by the way, was GMR Infra. Not bad, really, you have to admit. Revenues at 2,056 crores, very strong QOQ YOY. EBITDA up 640 crores, very strong QOQ YOY. And they've brought down the net loss down from 749 crores YOY. It was about 317 crores QOQ as well. So pretty strong show, both YOY, QOQ for GMR Infra. Pretty interesting name. Apollo Hospitals and Fortis Healthcare follow-up. Max's good performance. So Apollo revenues up 34% YOY, EBITDA up 105%, and net PAT up almost 3.5 or 4.5x. So pretty strong show there. Similarly for Fortis, revenues up 47%, EBITDA margin at 19.4% was up about 738 basis points, by the way, YOY, and PAT at 130 crores, up 8.4x YOY. Again, QOQ not necessarily the best for all the players, but pretty strong show nevertheless. I thought it'll be interesting to see. Just keep in mind, viewers, that Apollo Hospitals has had a bit of a rally in the lead up to the numbers over the last 5 days, so you've got to be mindful of that. Remember, Max too was very, very strong. Revenues were up, EBITDA was up, and PAT was up. Again, down QOQ, but up YOY. Some other results in focus include a fine organics. Now, usually specialty chemical companies have shown a very sharp dip in margins. This one did okay, 223 basis points. So only down 223 basis points at about 16.7%. PAT was up about 59 or 60% YOY. So I thought not bad. Himmat Singh Seed, QOQ was disappointing, but YOY, 24% up revenues, EBITDA up 55.6%. So it looked pretty strong. Strong net profit was at about 48 crores, which was up some 10x YOY. So pretty strong show by Himmat Singh Seed. Linde India, the revenues are up 37%. Operating profit margins were at 25.7%, which was up about 222 basis points. And remember, the net profit was up about 80%. Again, very strong show by Linde India. Let's see. It's not a cheap stock, but it's a niche. It's a company which has got a niche of its own. The whole oxygen business, etc., is all doing well. So let's wait and watch. I remember last quarter, Antique came out with a note saying that this is a multi-year opportunity and buy it, but it was at 1800. Then I think Linde India has moved up quite a bit after that. Info Edge I thought was interesting. There is a trigger of Policybazaar IPO up ahead. I think the numbers look rock solid. EBITDA was up 50% QOQ, by the way. Margins are up 11140 basis points QOQ, from about 30% to 41%. Such a strong show. I mean, even YOY was very good, but I'm just saying, and maybe YOY is actually a right way to maybe look at Info Edge in these disrupted times, because it's not a pure play tech IT business, IT services business. There might be a lot of seasonality to its businesses which it holds as well. But be that as it may, very strong show. We all know that real estate is doing well, and therefore Naukri should be turning up a charm. I think some of the others are doing pretty solid for Info Edge. So do watch out for this one. And no, let's just stick with that plate for one last minute. And it's Ashok Leyland, wherein the numbers on the revenue front looked okay, very strong, in fact, 40%. I think the operating profit margin miss was a big disappointment, 10.4% versus 15%. They reported a net loss of 103 crores. Difficult to say which way this will move, because the revenue growth was impressive, but I think the margin miss was just so strong that maybe, just maybe, this stock could maybe have a bit of a correction. So do watch out for this one as well, viewers. I would also maybe tell you to look at some names wherein the numbers were okay. Just keep these at the back of your mind. Give me a second, viewers. In terms of the strong numbers, by the way, weak numbers included a Granules India, included a Sterling Wilson Solar, all of these pretty shabby numbers. I thought companies like PNC Infratech, Garden Reach, Gabriel, all of those looked okay. So these are some names that you should keep in mind and try and study the numbers on the exchanges before the market opens if you want to trade them. All in all, the start promises to be okay, but be mindful. There are 5 or 6 global houses which are now said that India is not necessarily the overweight. In fact, it's underweight and they are downgraded. So maybe there is point to ponder on why this could be happening. Thanks so much for tuning to the Trade Setup. Have a safe, profitable day ahead.